Hey everyone, it's Mike from Orderflows, and welcome to this video where I'll be sort of continuing on the thread of talking about order flow imbalances. An imbalance occurs in the two-way auction between the volume traded on the bid and the volume traded on the offer, right? If the volume traded on the offer is more than 4-to-1 versus what is traded against the bid, you'd consider that a buying imbalance. If the aggressive selling into the bid is more than 4-to-1 versus the aggressive buying from the offer, you consider that a selling imbalance. And what's unique about imbalances is it's related to volume, okay? And oftentimes we look at volume as strict numbers, but when you're looking at imbalances, most traders actually look at it in a percentage, and that generally is not much of a problem. But sometimes I have what I call weak imbalances, where it's if you're using a ratio of 4-to-1 and you have a volume of 1-against-8, technically that's an imbalance, but do you consider that a legitimate strong imbalance? And that's why sometimes on imbalances I like to use a minimum volume of say 10 in the imbalance to consider that a realistic imbalance. And in most markets that are liquid, things like ES, even MES, obviously the interest rates, volume like that is not an issue. But sometimes, you're going to go into, say, thinner markets. For example, I'll just pull up really quick here the euro currency, right? The euro FX, just to give you an example of what I'm talking about. Let's, find one here, 2-against-12. Okay. I'd much rather have, 1-against-45 or 1-against-62 as opposed to 3-against-14, smaller numbers. And fortunately most software allows you to filter those smaller imbalances out, so you're not looking at an imbalance of say 7-against-0. Technically that's an imbalance, right? 7 traded on the bid, 0 traded on the offer. That's more than 4-to-1. But you don't want to be sort of looking at imbalances unless they have some significance. I like to use a minimum of 10, and for most markets I think that's fine. But again, when you're in thicker markets like bonds, interest rates, liquidity and traded volume is not going to be that big an issue. Now let's just go back here to E-minis, because what I want to talk about is a tool that's on the Orderflows trader called Imbalance Reload. Okay, now there's different ways to look at imbalances, and I've talked about stacked imbalances. I talked about that importance. Obviously it's a major part of order flow, right? That's something since even before I started using order flow, people were mainly keyed in on stacked imbalances. It's always been a major part of my trading and a lot of order flows traders trading plan. Then I had talked about also the importance of stacked imbalances, right? Where you have, or not stacked imbalance, rather, let me rephrase that, multiple imbalances. So just, really quick, I'll just show you right here. And what that is, multiple imbalances, is bars with 3 or more imbalances in the bar. Like you have it right here. It actually comes in ahead of where the stacked imbalance comes in. Okay, so it's giving you a little bit of a heads up prior to the buying that's coming in here in the stacked imbalance. And oftentimes what happens with stacked imbalances and why it's important is because the stacked imbalance is sort of a burst, one order, big order going through the market. And what I've found with multiple imbalances, it's sort of it's a big order, but it's being chopped up into smaller pieces, and the person is not really trying to show their intention to the market. It's buying some, lets the market breathe, buy some more, let the market breathe, buy some more, let the market breathe, as opposed to someone just coming, hey, buy me 200 S&Ps at the market, boom, because 200 is not going to move the market more than probably 2 or 3 ticks. But what I want to talk about today is another interesting nuance in the order flow, and it's what I call an imbalance reload. Okay, so we have it on our Orderflows trader software, Imbalance Reload, and it's going to be until tested. Let's. I'm just going to turn off. I'm going to turn off the stacked imbalance because I don't want you guys getting confused over things. So I'll turn off stacked imbalance. I'm going to turn off the multiple imbalance value right here. Okay, and it's just going to show the imbalance reload. Okay, because it's important when you're looking at imbalances. Normally we look at it vertically, right, up and down in a bar, right? Like for example, stacked imbalance, 1, 2, 3 stacked on top of each other, right? Multiple imbalances, one, then spread out, another one, and another one. Now, an imbalance reload, right? What that is, it's imbalances that are spread out over 2 bars. Buying imbalances, right? It's 2 green candles, right? You're going to be looking at the buying imbalances. It's 2 red candles. You're going to be looking at the selling imbalances. And, honestly, in a market that's going sideways, like we're seeing here, right? This was just a little bit earlier today before that big run up. We're in a range between 82.5 and, 89, more or less. And you're seeing, imbalance reload, imbalance reload. Okay, you're in a sideways activity. Any sort of clue the market's going to give you in sideways activity is going to be hard to act on, because you don't know if this market's really breaking out or not. Not until you start breaking out, then you start seeing the imbalances come in. But what the importance of an imbalance reload is, let's just go back here in time a little bit. When you get that imbalance reload, as the market starts breaking down or breaking up, and really what it is, now these are minute bars, okay? So you can see imbalance reload here, sustained selling, aggressive selling over 1, 2 bars that's causing imbalances, 1, 2 bars. It's causing imbalances. Here you have an imbalance reload, a bullish one, 1 bar, 2 bar, right? It's coming in at the same level. So what's happening, right? If you understand how execution algos work, right? There's a bunch of different execution algos, and one of the basic ones, and there's a lot of offshoots of this, is the time slicer. Okay, and what you do as as institutional traders, you have your order, buy me X amount of whatever you're trading, E-minis, and slice it up over time, and then it does like even smaller slices. So what you're seeing is a burst of buying here, let the market pull back, another burst of buying coming in here, just as here, a burst of selling, a burst of selling. Now this one's coming in, again, in an area we're starting to go sideways. Now we're starting to break down, and you've got that imbalance reload. Just as here, we're starting to break out, right? Your high was right here before. Now you got that aggressive buying. It pulls back, more aggressive buying, right? I like to use, I like to draw out the imbalance reload with like a zone, if it's bullish like this, or bearish like this, because it gives me a good visual quickly right away. That's telling me if I know that we're starting to draw this out, this zone out, that this market is starting to break out, right? Just as here, well, I'm not convinced yet that this market's starting to break down because we're trading right around it. But if we're running away from that, the bullish one, or running away from the bearish one, to me, that's going to give me a good area that I could be thinking of getting short, right? And you can see even here, we sort of come right back up to that area before we sell off some more. Let's, find another example here. You got 1, 2, you actually got 2 in here. But again, all you got to do is spend a little time, look to the left of your chart. Is this in an area that we're trading in, or is it an area we're breaking down to, or breaking out of, rather? This one, start breaking out, it came right back to the tick here, traded even here, sort of came right back up to it. Again, trading, what are we doing to the left, right? Are we going sideways? And again, one of the key points of being a successful trader is understanding what kind of market condition we're in, right? Are we in a sideways market? Because if we're in a sideways market, no matter what you do, it's not going to be very effective, right? No matter what you're trading, unless your trading plan is, range trading, right? Buy the low of the range, sell the high of the range. Me personally, I think it's more fruitful to, I would have taken this trade, but just go sideways on me, after you're getting in. This one, I would have loved to have taken it, but it traded right back up there in the next bar. But when you get down in here, this one sideways, okay, so there's 3 potential trades that, just couldn't get any movement on it. Then you hit this one. This is a nice trade here, followed by a beautiful trade right here, I sound like Donald Trump. Oh, that's the best, most beautiful trade, where it really comes right back up to that level before you got that big sell-off. All right, and again, take it in context. Up here, 56.11.5. You get your imbalance reload where the market runs away. Then you get down here, you got another imbalance reload at 78.75. Okay, or 79 rather. Well, it's a 30-point move. Do you still want to be taking an additional short after the market sells off 30 points? Probably not. But that's my logic on there. But again, just look to the left when you see an imbalance reload. Is it coming in an area you've been trading sideways? Okay, and if it has, are we breaking out or breaking down? Okay, and the clue is oftentimes going to come in the bar afterwards. All right, so again, look to the left. Are we trading sideways? Look to the right. Are we starting to move away from it or not? All right, that's going to give you an opportunity to catch a trade like this, or even a halfway decent trade like this one. So that is imbalance reload. Okay, and the question I get often is, hey Mike, I trade an hourly chart or a 4-hour chart. What's some of the tools that I could use for analyzing the order flow? Well, to be honest, right, if you're trading a 4-hour chart, you probably don't need to use order flow. Just follow price, because 4 hours is half a trading day, right? The U.S. hours, and something that you're seeing happening in the order flow that happens 15 minutes into your 4-hour chart is probably not going to last for 3 hours, the next 3.5 hours. So for example, like 5 minutes. I do look at 5-minute charts. I'll just pull it up here really quick and show you what I mean is, when you're looking at things like imbalance reloads, right? You don't get a whole heck of a lot of them. Like here's a bearish one on a 5-minute chart, simply because you got 5 minutes to rotate around where that imbalance was. Okay, so that's why there's certain parts of order flow that aren't going to be as effective on a longer term chart. I can't really consider 5 minutes a longer term chart, but you get the point that I'm trying to make. Now, if I was looking at a 5-minute chart, there's other things I would focus on that's more volume related, as opposed to more related in the two-way auction. You can see in the night, well, not night session, but 6 in the morning, there's 7 in the morning, there's one there. You get some in the evening session, but obviously the evening session is a lot slower. That's 6 o'clock, but you see the day before, again, you had one up here. But there's just a lot of time, if you're on a 5-minute chart, for it to sort of come in and fill. That's why you don't see necessarily a whole heck of a lot of imbalances on a 5-minute chart. And again, you want to take advantage of things like imbalances, market imbalances, as quickly as you can. So, to sum up, if you're on a longer term chart, and again, I hate to use that term, longer term chart, when I'm talking about a 5-minute chart, but you understand what I'm saying is, just bear in mind, you probably want to look at other things in the order flow, things that are volume related. Okay. So anyway, I'll probably talk about that in a different video. So again, hopefully you found this this video useful, and sort of open your eyes a little bit into other different ways of looking at imbalances in the order flow, right? So thanks everyone, and I'll see you guys on the next video.